All right, come on in, folks. Come on in. Come on in. Come on in. And let's get the show that we deserve. The show that we deserve. The show that we deserve. Let me just check myself on LinkedIn. I guess I'm already live on YouTube. And here I am on LinkedIn. Live on LinkedIn. 176 episode. Go live. I'll just put myself out there on WhatsApp. Alright, I'm live on LinkedIn, on YouTube. I've sent the message on WhatsApp. Yes, we're sorted. We're sorted, right? Perfect. I'll just check myself. The vocals. Good morning. I'm audible on YouTube. Am I audible? Mr. Sumanth Kumar, good morning. I'll just check myself on LinkedIn. Yeah, I think I am. So I'm audible on YouTube and on LinkedIn, which means I'm ready to go. The show that we deserve. The show that we deserve. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we got to follow this tradition, the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like hot water with black pepper in it. You know it. And here we go. Nice. Let's do it again. Sublime. Beautiful. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. And that's such a nice thing to say. With that out of the way, let's begin. Yesterday night was a very weird night, folks. Very weird night. You know what happened yesterday night? Nvidia's earnings came out and they weren't good. So while the earnings prima facie looked good, and they addressed Dr. Burry's charge of essentially fraudulent disclosures on depreciation of assets, the earnings came out, the stock went up 5%. It was all good news. Then when people began reading deeper, it all went down. And then it just went down, I guess 2.5%, 3%. So first it went 5% up and then went 5% down. Something of that sort happened. Uh, Nvidia went down, Palantir went down. Uh, Sam Altman, he said, we got to brace for an economic headwind. Uh, MicroStrategy got in trouble. Bitcoin went down by about 5.5% at its lows. Uh, so the entire US economy structure, essentially the fiat play, the AI data center, it turned out to be very, very bad. Nvidia's earnings showcase some problems. First of all their revenues, 80% of their revenues just comes from four customers. And adjusting for the investments it has made on the people who are buying its GPUs, there is a gap. Then there is a rise of inventory at the same time when it's saying that its products are selling out, right? So that is a risk. Then it's just fraud essentially. Coincidentally, since 9 quarters, they have been exceeding the street estimates by $2 billion. So for consecutive 9 months, 9 quarters, they've been exceeding street estimates by $2 billion. So there's a lot. There's just clear and plain fraudulent number cooking that is happening. Of course, we've talked about the circle jerks, right? Them investing in other companies, they buying, and so on and so forth. So it's just very, very weird whatever is happening. And people have seemed to realize, the street has seemed to realize it. So Bitcoin went down, Nvidia went down, uh, S&P went down, Nasdaq went down, Palantir went down. Uh, it was horrible. Uh, and then, what stayed up? Can you guess what didn't go down? Gold didn't go down. Gold was where it was. So, what did I tell you, folks? Didn't I tell you? Now, that was last night. Uh, then, this morning, as Japan's market opened up, SoftBank has gone down 10%. So this is, and as the scrutiny increases, so Dr. Burry said, OpenAI is the linchpin here. Linchpin means one thing that needs to go out, the most critical part of the story. OpenAI is the linchpin. Can you point out who their auditor is? That's what he said. Anybody who gives the name of the auditor of OpenAI will win some sort of pride, right? And then people found out that OpenAI, a $500 billion company, who's wanting to go public at a $1 trillion valuation, their auditor is a 12-membered boutique firm. Just a 12-membered boutique firm, which specializes in non-profits. They're not audited by Big Four, Big Five, whatever. So it's all now transparent, and it's all the beginning of something crazy happening around the world, right? And I told you at that moment, what happens is when something like this happens, gold stays where it stays, and everything else can drop dead, right? So that's what's happening right now. This Today is Friday. Friday is gonna show what happens with the US markets. That's gonna be the last working day. SoftBank has already fallen 10%. What happens to India at 9:15 is something to be seen. Now, what can happen with India is a complicated story, because India is the only economy which is sort of sheltered from this froth of the data center operations play, right? There is not much going on in India, which means Indian market is pretty insulated from the whole operation in a very, very, uh, you know, interesting way. And while Indian markets were looking expensive price to earnings wise, they are still not a part of the bubble, right? And India is also growing at like 7%. So Moody's gave an FY25 growth rate of 7% to India, 6.6 or 6.5 something for FY26. So India's growth rate is on. Indian markets are okay. Indian markets are mostly not FPI dependent, retail dependent. So what happens to India is a complicated question. Of course, there's going to be some spillover here and there. Financial services might just not be very happy, right? However, overall, it's not that bad. So somebody asked me a question on Thinkers Frequency on comments, that why did some ICICI Prudential or something of that sort, why did they trim their FPI holdings all of a sudden and so on and so forth. I don't remember the question. Maybe it's a sign. It's a sign. Whatever is happening in the market now. Bitcoin people are saying that if it goes down by 75, uh, you know, down to 75. So right now it is at 76 lakh rupees and about $88,000. Let me just check. Right, that's what Bitcoin is. So it's at 76,000 rupees, 76 lakh rupees, and in dollar terms, it's at about $88,000. Okay, and if it goes down to 75%, the whole Michael Saylor situation will be liquidated. Michael Saylor is already looking at going away from the Nasdaq premium list, right? It's going to go away from that index because it doesn't meet the size requirements anymore. So all that is happening. So we are looking at a proper final kind of a showdown. What people were expecting. Dr. Michael Burry is doing very well. I mean, he shorted, his shots were placed well. So if you look at the tops, from the top, Nvidia is down 25%, 20%, and Palantir even more so. So his shots are not doing bad at all, right? So they've done very well, and that is what we are looking at. So if you remember, viewers of Thinkers Frequency will remember, I told you that Bitcoin is not a hedge of the fiat system. Bitcoin is an early indicator. Do you remember that? I told you. Nobody else told you that. Nobody else told you that. I told you that Bitcoin people talk about it being a hedge from the financial system, but it's only an early indicator, if anything, right? It is not a hedge at all, and that's exactly what happened. Bitcoin fell a few days ago, and I told you that this could be a sign, and now it's happening. So let's see what happens, folks. What do you feel? Is it interesting to you? Huh? Some really, really nice analysis. If a CEO comes and says there's no bubble, then there is a bubble, says Mr. Tushar Tiwari. Well, I sort of don't agree with that, because what if a CEO says it during a normal time? So you're talking about plausible deniability, right? And I understand that, but that statement is a blanket statement which sort of is a double-edged sword. Maybe he's right, maybe he's wrong, right? It's just the situation is very, very weird, and let's see what happens, folks. So this is pretty clear. So whatever we've been talking about for like a few months, it's all happening now. I wrote an article, if you remember, after discussing at Thinkers Frequency, and finally happening. So moving on, folks. Speaking of Indian economy, TCS has joined the AI data center rush with a $2 billion TPG alliance. So TCS has done a joint venture which is called Hypervault with TPG. It's a 51-49 partnership. TCS is going to be 51. TPG is 2 billion, 1 billion. So people said, why did you go for a partnership? You have a lot of cash in hand. They said it's a best use of our investors' money. We should not be the only people footing the bill, which is totally fair. So TCS is now going to get into the hyperscaler data center operation, which was on the cards anyway. This is a pivot for Indian IT, right? And this is what's happening. Hypervault 5149 will raise $4 to $4.5 billion debt, right? India is the most undervalued data center opportunity, says the chief of TPG. He says India has the lowest construction costs. The land costs are also very reasonable. There's a lot of connectivity, and then there's a talent pool. So all of these things come together, and make it very, very obvious that India is a green field when it comes to this particular data center operation. And TCS, it's a valid pivot for them. Speaking of Indian IT, right? People are saying that risky investors. There is a report which says risky investors can look at Indian IT, because when the index has turned like 12% plus, Indian IT index has turned 12% down, right? And now things are bottoming out and it could go well, and so on and so forth. Well, risky investors, sure. In fact, the people who invest in IT should get some sort of a Pradhan Mantri Bahaduri Puruskar, right? Because Indian IT's headwinds still exist, and in a big way. So let's say if a crash happens tomorrow and the financial ecosystem gets tight, we know what's happening to yen. We obviously know what's happening to the Japanese carry trade. We've talked a lot about that. So the world will not have the kind of money it had to make investments, right? So there's going to be a liquidity crunch, and as a liquidity crunch happens, what happens to the Indian IT industry? Because it depends on these markets for a lot of business. So obviously those deals will be difficult to have. Of course, there's AI and so on and so forth. A lot of AI adoption. What these people will try to do is they're going to push the AI adoption pedal to the metal, and let's see what happens there. So it's all weird, but nothing that you didn't see coming, because we discussed it here, right? So that's what's happening. Moving on. IndusInd Bank mulls a QIP route to raise confidence capital. Confidence is something Indian IndusInd Bank is lacking, of course, because of all the charges, all the frauds, all the raids, and so on and so forth, right? So they are looking at going QIP, raising some institutional money, so that it instills some confidence in the bank amongst the financial ecosystem. Lender in talks with Citibank, Hindujas may participate on pro rata basis. So Hindujas are trying to fix the whole play. At the same time, India's macroeconomics look pretty steady, right? Even though the October core growth output was flat, pretty much flat, uh, energy requirements and energy production and so on and so forth. So this is mostly a leading indicator, and all those numbers were sort of flat for October, which I told you, right? Because all of this essentially the core play, right? Core sector output growth remained flat in October, weighed down by contraction in mining and electricity. So that's obvious, that's seasonal. A lot of it is seasonal. And also, the growth rate numbers are where they were. As I told you, 6.4%, 7%. All the aspects are where they were as far as employment numbers are also considered. As far as the automotive sector is considered, Mahindra and Mahindra's 10-year plan is looking at a reasonable, like a 16 to 18% CAGR when it comes to passenger vehicles and light consumer vehicles, commercial vehicles, LCVs. So automotive sector, the domestic consumption sector, all of these systems are pretty stable for the Indian economy when it comes to uh, you know the major sectors of it. Major sector is also a defense play, which is getting a very quick deal, a 90 million deal with United States. India is looking at reloading its ammo and missiles delivery, Javelin missiles, Excalibur rounds, etc. Purchase under emergency route. This is happening with US, right? US has cleared sales and notified Congress. So that is why is that happening? Of course, India is trying to warm up and finish the deal with US. So it's trying to do all these things to cajole US into a good deal. So you can expect these things to finally lead to a good FTA with the United States, which is what these people are hoping for. That the deal gets out, because everything, all the exports have fallen down. Right, India's exports have fallen down. Why they have fallen down? Because even though there's nothing changing when it comes to Indian exports, China has gotten a favorable treatment. They've said that their fentanyl tariffs will be down. So if they're decreasing their fentanyl tariffs is of course US laid down tariffs on China in an attempt to stop the fentanyl supplies to their country. So China was smuggling a lot of fentanyl. US said you got to stop that. They said okay, we'll stop that. So US brought down their tariffs. When they brought down their tariffs, China assured that we're not gonna smuggle more fentanyl. So it's just an assurance. It's fugazi, but whatever it has led to is China's edge in the competitive export market, right? Because if tariffs go down from for China, Indian exports become uncompetitive, right? Because India is nowhere when it comes to export quality. So that's what's happening. Electronics exports are okay, right? And everything else are falling down, which is so electronics exports are okay. Why? Because they're amongst the two things that have not been tariff. What is the other one? Pharma. So electronics and pharma are okay. Everything else has fallen down, and that's why India, in a bid to sort of calm down the situation, is hurrying up these buying of US purchases and so on and so forth, so that we get a good deal. Speaking of a good deal, Russia is not getting a good deal. Reliance has stopped Russian supplies, right, for its refineries in Jamnagar and so on and so forth. This is once again a step in the direction of calming US down, and all of those people. November 21 is the date, right, when the sanctions come in place. To avoid sanctions, all of these private companies are essentially distancing themselves from Rosneft and Lukoil, as we discussed. So that is also an aspect to be noted, because Russia is where it was, Ukraine is where it was, everything is where it was. But India's oil purchases from Ukraine have sort of mellowed down. I'm sorry, from Russia have sort of mellowed down. At the same time, India is trying to buy more and more things from US, and so that geopolitical headway is also something to be thought about, right? How is that gonna pan out? All of these things uh, are just one indication that you got to preserve your money, because it's not a stock recommendation. Of course, it's not an investment advice. I'm nobody to give investment advice to anybody, but it's a fact that things are not gonna be uh, as simple as they've been, right? Because for a very long time, markets were just going up, right? So everybody was making money, everybody was very happy, everybody felt like Warren Buffett, right? But it's not going to be the same. That's what it looks like. So a prediction, sure. You should see some correction happening, especially in the US markets. Indian markets, tough to say, but there should be some spillovers. Although Indian markets could also benefit, because all that money, if it goes out, it could somehow find its way in India. Although all the margin calls, they're gonna destroy a lot of money. So maybe a lot of people won't have that money to invest. Moving on, folks. It's very interesting. Cursor, the founder of Cursor, has an interview. Aman Sangar, he's a 25-year-old kid. $2.3 billion raise, equal parts paranoia, equal parts excitement, right? Rest of the founders have quit. Cursor is, of course, the co-pilot, coding co-pilot. Realized his parents, they have pretty good background. His father is a very senior investment professional. Mother sits at the board of Pratham USA, which is a very big NGO, very prominent NGO. And there's always a banker and an investment professional in the family, right, when it comes to young people raising money. So what do you do to raise money? What should you do to raise money? You should be born in a family with a lot of investment bankers and a lot of bankers and a lot of investment professionals, right? If you gotta raise money, you gotta pick your parents, folks. Moving on. A lot of political chit chat, which we best not discuss. After Delhi airport glitch, AAI to get cybersecurity division, right? So there was a cybersecurity glitch in Delhi, which led to a lot of flight cancellations and delays. And after that, AAI is the Airports Authority of India. They're looking at making a specific cybersecurity division. And my response was, what? You didn't have a cybersecurity division before this? Is it some kind of a joke, man? But yeah, they apparently did not. They had that team essentially apart, dispersed in other teams, but they're gonna make, uh, you know, new messaging system to replace failed AMSS, Aeronautical Message Switching System, to be replaced. So they're gonna have a new cybersecurity division, which is something I was assuming that Airports Authority of India would already have. But anyway, moving on. India close to a trade deal, Nifty just a few steps shy of the peak. India close to a trade deal. Again, everything I've said leads to that trade deal. That trade deal is very important for India because the export markets depend on it. Export markets also depend on it, and the stock market also depends on it. And with that, a lot of investment finances, it's basically all tied up. Second order effects, they affect everything. And it could be an all-time high situation, kind of a situation when it comes to Indian stock markets. Although this report that these people have published is sort of, there's a latency in that report. Again, when it comes to ETs and other people's newspapers, they are basically talking about Nvidia upbeat forecast suits fears of AI stock market bubble, right? Stronger than expected $65 billion sales, right? So they are talking about the just the initial euphoria. They're not talking about how it went. So maybe they need to update themselves, and maybe they're not factoring in the risks that have just been exposed in the last few hours, last night. But for now, Indian equities are of course favorable. Let's see how the trade deal situation happens, right? We've already talked about their recommendation for high risk investors. Moving on. Chinese polyester textured yarn to face anti dumping probe. Chinese polyester textured yarn hurting Indian silk and all of these companies, which is not surprising. So they are looking at some sort of anti dumping play. There is something very interesting going on. RBI may have to train guns on the long end to bring down yield gap. So there's a yield gap when it comes to 10-year yields and 40-year yields, and that gap has sort of extended a lot, right? So the 10-year yield gap, I'm sorry, the 40-year yield and the 10-year yield, the gap between them has crossed 80 bips and so on and so forth, 80 BPS, which is basis percentage, basically 0.01%, right? Basis point, I guess it's called. Bips, finance people say. But anyway, so to solve for that, RBI has to step in, and RBI is assuring that it's gonna fix that because it's very important to fix that. Why it's important? Why do you think it's so important to essentially fix the liquidity? I'm sorry, the yield gap of 10 to 40 years. I'll just tell you what happens. So 40-year yields is a long-term bond, right? 10-year bonds, short-term bond. If the long-term bonds have a very high yield, right? That means the prices are low, the bonds start making losses, right? So it causes problems. Essentially, long-term and short-term bonds tell you what is the comfort level with the kind of debt there exists. Short-term bonds have, uh, you know, uh, long-term bonds have a higher yield. Short-term bonds have a lower yield generally, because uh, of course, right? If somebody is getting a long term play, they want a better interest rate or something of that sort. Unless there's an inverted yield curve situation, which leads to more rewards for the short term. Because in an inverted yield curve situation, people expect a recession or something of that sort. So if there's inverted yield curve and if there's a recessionary environment, people want more for short term bonds, right? Because they expect things to default and so on and so forth in long term. So normally it's an upward slope where the yield rises when it comes to time horizon. But in the inverted yield case, it's the opposite, right? India doesn't have an inverted yield case situation, inverted yield curve situation. That means that there are no recessionary concerns when it comes to India per se, right? But if the gap becomes too large when it comes to short term and long term, it leads to problems. So I'll just tell you, it's called yield curve spread. Okay, so this is something that we've not discussed in depth which is why I'm telling you. So investors demanding a big gap means that investors are demanding much higher returns to lend money to the government for the long term. Okay, that signals fear, uncertainty for the long term, right? So what's RBI worried about? Because if people want more returns for long term, investments to the government's borrowing becomes more expensive, which leads to fiscal problems, right? The government long term bonds, loans basically get expensive, and it affects the economy and so on and so forth. So RBI wants to control this, the yield gap. So it should be there. There should be a yield gap, but it should not be that much, right? So what can RBI do? Essentially, RBI can buy some of the long-term bonds, right? Because if it buys long-term bonds, right, the prices of the bond goes up. When the price of the bond goes up, the yield goes down. You understand? Right now, not many takers for that bond. The prices go down, yield go up, right? But if RBI starts buying those bonds, the prices go up, the yield goes down, and essentially that is one way to uh, handle the situation. This happened because the government has been essentially issuing a lot of long-term bonds, and the demand for them has been a bit tepid, and so on and so forth. So this is basically what we are looking at, right? So I hope my explanation is clear, right? Very slightly complicated stuff. People don't understand these things much, but we do, because we read between the lines and so on and so forth. Uh, Similarly, in a similar case, when it comes to the banking situation, central bank, there's a news about RBI said in recent interaction that it'll intervene to keep market liquidity at more than 1% of the NDTL play, that is net deposits, right? So central bank intends to not let system go dry. Well, that is obvious. Liquidity management by RBI, we've discussed a lot about it very, very well, right? So, but what is the problem? What is the problem? Basically, the situation is that uh, banks have a problem when it comes to liquidity. Sometimes there's excess liquidity, which is a problem. Sometimes there's low liquidity, or there's which is also a problem, right? If liquidity is high, right, if interest rate falls, money is cheap essentially, and vice versa. So the net demand and timeline liabilities, which is NDTL, right? That's total deposits that bank hold, right? Liquidity should be at least 1% of the whole deposit base, okay? And right now, it could be going lower. So what RBI will do is essentially, it could buy government bonds yet again. So if it buys government bonds, how does it buy government bonds? With cash, right? So if it buys government bonds, bonds go out of the system, but cash comes in, so liquidity increases, right? Which is a part of the open market operation play, and that is one way of injecting liquidity. And this matters, because if this doesn't happen, the bank's liquidity will become a problem. They'll have to increase rates and so on and so forth, the interest rates and so on. So with this, banks get some comfort that RBI is there to set everything right. I hope my explanation is cool, because this is very important, right? So at the moment, what has sucked out the liquidity is essentially tax payments, security settlements by the government, festive demand, and so on and so forth. This is very, very important, but now right? So first part was essentially the yield gap of the bonds, and the second was liquidity. And if you heard them properly, both of them were corrected. Sorry, connected, right? Moving on. Uh, Mule accounts carry bulk of fraud to quiet nooks. Mule accounts. So if you remember, I told you a story of my friend running an illegal betting shop, right? Which is basically an under the table betting operation where where Dream 11, the kind of people, they are over the market, right? So it's all taxed, and they pay taxes. It all happens with payment gateways in a very legal way. How my friends do it is that they have to personally verify every transaction. So they ask for a UPI play, right? So they get these mule accounts from very very remote areas. These people are talking about Jharkhand, Bihar, Chhattisgarh, Madhya Pradesh, and so on. Very very remote areas. They get these mule accounts. And one second, I have got a comment, folks. I missed it. Oh, this is a question by Mr. Abhishek Kumar. I want to scale my cloth B2B business across India. How to do? Mr. Kumar, we can come to that. Anyway, so we were talking about the mule accounts. So what these people do is that they get these accounts from these poor people. Poor people don't know what's happening. So mule is essentially mule. This word comes from the drug industry, drug dealing. Drug dealing. The mule is a person who is not a part of the drug operation, but he is doing the transportation for somebody. So in the earlier drug days or drug dealing days, or even now, well, I'm not a drug racketeer, but I read a book, Confessions of a Drug Racketeer, which was very interesting. So what they do is they essentially pick an old man, right, who's retired, and they use his travel trips to essentially transport, because he has an unsuspecting behavior, right? So that's where the mule comes from. There's also a very good movie with Clint Eastwood, Mr. Clint Eastwood on it. It's called Mule, I guess. One second, folks. Let me check the name. Clint Eastwood Mule. The Mule. Yeah. So it's a 2008 movie, The Mule. Good movie. So that's where this word comes from. Okay. Mule account. So what this mule account does is it has some accounts, and what these people do is they get the money in this account. Okay. But since there's no payment gateway, there's no there's no automated means to check how these payments would go. They ask for the person to actually confirm the transaction. They check it with the bank, right? And then after the money has been deposited in these accounts, they have to roll that money over. They have to translate it, withdraw cash, then do hawala, and so on and so forth. So it's a very complicated operation for running a betting operation, right? Illegal one. So what these people are saying is that 8,50,000 accounts frozen across 700 branches. So the government, the banking system is trying to close in on the mule account play, right? Now my question is, why now? Why so late in the business, right? Whenever there's something good happening, or whenever there's something important which is happening, whenever there's a step in that direction, all I can think of, at least, or all people think of, is why didn't you do it earlier, right? Which is so obvious. So Katni and Shajapur in Madhya Pradesh, Kala Buragi and in Karnataka, and pockets of Assam, AI-based RBI Mule Hunter detects about 20,000 accounts every month. Mostly found in cooperative banks' rural branches. Customer age group 18 to 25. High volume accounts, inconsistent with the income. And you know where that money goes, of course. Nobody does, by the way. This is not clear, open information. I'm sharing a trade secret, right? Moving on, folks. The RBI governor says good trade deal with US will ease pressure on our accounts. That's okay. India to stay fastest growing major economy for decades, says Mr. Peeyush Goyal. Well, we don't know about decades, but it's definitely going to be the fastest growing economy for a few years, right? That's for sure. Moody 7% growth next year, 6.4, while the world grows at 2%, less than 1.5%, and so on and so forth. The second major economy which is growing fast is Australia, which is at 2.3%, excluding China, of course, which will grow at 4.2, 4.5%, maybe 5. Not 5, but yeah, around that area, right? So that's what's happening. Renewable energies urged to show records on transfer of benefits from GST cuts. Tariffs must be revised on refunds issued to reflect GST cuts from 5 to 12%. So from 12 to 5%. So Renewable energy companies got some sort of, they have had an interesting relationship. Earlier, it was 5%, the GST play, it was raised to 12%. And then when the GST rationalization happened, it was again from 12% brought down to 5%. Now, when this happened, of course, there's this whole duty structure, the inverted duties, and so on and so forth. You know about that. So they want some sort of rebates on that, right? But the government has said that you've got to show proof that the prices were indeed transferred, the price benefit was indeed transferred, because that is a very big issue when it comes to a lot of industries in India. That they got a lot of GST benefits, but they just chose to pick up the money, right? So that is the situation. In 2021, the revised GST to 12% from 5% resulted in a change in cost of input of goods, right? The recent revision on renewable energy and parts for their manufacturing to 5% from 12% in effect resulted in a change in the cost of input goods yet again. So we observe that a decrease in GST rate has the effect of saving the project's net costs. So that's what the renewable energy generation systems need to furnish to DISCOMs the relevant documentation backed by an auditor certificate to get whatever they're asking for, right? Uh, so that's what's happening. Speaking of some interesting happening with Indian industry, RITES seeks financing to deepen African market access. Railway Navratna in talks with Exim identifies 12 African nations interested in retrofitted locomotives. So Indian Navratna, that is a PSU, seeking the African market for the train business. That is interesting. That is interesting, right? Moving on. Biocon has a very unique position globally as a biosimilars leader, says Madam Kiran Mazumdar-Shaw. There were concerns about Biocon's debt issue because of the merger and so on and so forth. That's why Biocon had to demerge its entity to take care of the debt, the looming debt. She says the debt thing is, overblown. Nobody talks about how we are extremely strong in the biosimilar segment. Biosimilar is like generic in spirit because it's low cost and it's similar to an existing drug, but it's not an exact copy. It's basically living similar of the biologic, right, which is getting made, which is the original drug. So it's a similar of that biologic, a living organism, and that's how biosimilars get framed, and they have a very strong position. So she says people focus too much on the acquisition debt and not enough on the fact that we have become a leading global biosimilars company, right? Some numbers: we're in a sweet spot, very unique position, right? Nobody has interchangeable insulins, and insulin now is becoming very big opportunity for the fact that actual insulin companies are planning to focus on GLPs. We are taking that advantage globally. So she's talking about a lot of advantages which the company has in the global biosimilars business. Biocon is the only company with interchangeable biosimilar analogs like insulin glargine and insulin aspart in the US market. According to Shaw, the company's acquisition of Viatris, often scrutinized for its debt impact, has strengthened Biocon's position as one of the top 5 biosimilars companies globally, right? So that is the debt play has $1.2 billion. Whatever Biocon is doing to solve for that problem, ma'am is trying to divert attention and say that the business strength has gained a lot of meat. Right? Let's move forward, folks. There's another pharma deal. White Token, Singular, and Credo to invest over 1,000 crore in Renault Healthcare. Investors buy combined 10% stake, valuing firm at 11,000 crores. Post money, of course. So a lot of investors. Peak XV was one of the investors. They're offloading a share, right? A branded formulations player with strong presence in the chronic therapies. So that is what's happening. Founded in 2007 by Pankaj Singh, La Renault has emerged as a leading maker of branded formulation with strong presence in chronic therapies.
dominant player in the nephrology segment besides accelerated growth in CNS, central nervous system. So the company reported 1700 crore revenue and a 360 crore EBITDA. Right? It's expected to close the current fiscal year at revenue of 1200 crores. So at a revenue of 1200 crores, the company has done is clocking a value of 10,000 crores. What would its revenue multiple be? Right? 10,000 crores. So something like 8 8 or something, right? That's what it is. So 8, essentially close to 8. And that's what's happening. So good deal, I guess. Good deal. They are getting a pretty solid revenue multiple. That's awesome. Moving on, folks. Meta is setting up with SIFI a 500 megawatt data center in Vishakhapatnam, Vizag. SIFI to build facility, Meta to be end user, invested 15,000 crores. Yet again, another investment in the data center play. India is getting a lot of it. And right, electronics, the only bright spot for exports. We've talked about that. Record 19% year-on-year growth while other 9 sectors fell. Chinese dumping US tariffs to wave. We've talked about that. There's a report by a company called Ormax Media, which is saying OTT craze grows, but film lovers can't stay away from theaters. Well, I call bullshit on this report. So, there is a pattern. What happens is, Indian film industry, for whatever clout it has in the market, right? When I say clout, I mean power in the press. There comes a bad news, and then the industry tries to arrange a good news. Then there comes a bad news, and then the industry tries to arrange a good news, and that's a to and fro. So you remember what we discussed a few days ago, where we talked about the Indian film industry really struggling, right, because of a lot of things. So they published this report, this bullshit report, with a survey of 15,000 people, and they're painting something like SVOD audience who also watches movie in theater 88 million. Theater going audio who does not have access to SVOD 76 million. SVOD is subscription video on demand. So they're just painting some numbers to make it seem like the OTT business hasn't killed. So their narrative is that the OTTs have not killed theaters. And that's exactly what Mr. Bijli was also trying to say, that we are just coexisting, So he was trying to put theaters with restaurants, with hospitality, with outdoor entertainment, with live gigs and so on and so forth. That's just the industry trying to save itself. And good PR, what people want when it comes to good PR is some study. But studies don't mean shit. Moving on, folks. Ashok Leyland to add new diesel truck models. Well, okay. Moving on. Some fundraisers raising happening. Big Basket, 200 crore debt. Mo Engage, $260 million in equity. Right? Lending cards, 850 crores, and so on and so forth. A lot of actions happening when it comes to AI companies, and Tata Digital ancillaries essentially struggling to raise money. That's why 200 crore debt is nothing for a company like Big Basket, and the scale of it, it's basically nothing, right? But this is news because Big Basket is actually struggling. BB now is struggling, and by a lot. So let's see how that happens. Insurtech company Pitbit AI bags $7 million. Well. AI company raising money. You know where that money needs to come, right? Where that money needs to come is to me. That money needs to come here, folks. That money needs to come here. Speaking of money and coming, right? 119,000 jobs in September. US labor market stabilizes after decline in August, and they didn't publish reports in October. And this September market job report is the one which is going to get used in the December rate cut situation, November-December rate cut evaluation, which the Fed is doing. And when it comes to jobs data in US, from US, don't trust it. That is the word. It's just a bunch of bullshit. These people have been fudging data in all directions, right? Last year, all the data which came out pre-election was fake. Then Trump came along. Uh, the data which the publisher, the person published, Trump said it's fake. He fired the person, then they changed the data. So it's all fugazi when it comes to US job data. India, by the way, has done a much better job, much more reliable. So let's see what the rate cut situation is. With this play, with the 1,19,000 people getting employment, the job market doing better than expected, you will see some good news when it comes to rate cut situation. So the rate cut is going to happen in US. What it leads to is a subject to question. Right now, as you see, US economy is in trouble. Is in trouble, folks. Crypto wiping off $1.5 trillion after the Bitcoin plunge. Moving on. Indian economy, by the way, agriculture sector delivers bumper harvest in FY25. So if you look at our agriculture, if you look at services, if you look at manufacturing, all of these things, India has been pretty robust. And also the stock market, very robust. Less to do with FPIs, less to do with the foreign guys, standing on the strength of retail investors. So let's see. Moving on. A Supreme Court has scrapped 25-year-old practice rule. So there was a rule called 25-year-old rule for CAs in tribunals. That means a CA who was like 50 years old could only be a part of that. That rule has been scrapped. This is once again, right? Ben says rule would force CAs to wait until age to qualify for tribunal posts. A lot of action is happening when it comes to the market of CAs, CS, law firms and so on. Why? Because the government essentially wants India's own Big Four, India's own share in the $260 billion auditing business, auditing and financial consulting business. So let's see if these things lead to better outcomes. Speaking of audits, folks, ED has attached about 1,500 crores in RCOM and money laundering case. No respite for Anil Ambani group at all. Mr. Anil Ambani in dire straits, right? In dire straits. Nobody knows how this is gonna pan out. Very weird situation, and I'm surprised how did it turn so bad. So just 100 days ago, things were looking at turning around for Mr. Anil Ambani, and then suddenly ED started cracking down on him. SBI marked his loan as fraud, even though it was in contention for a decade or so. Everything just unwrapped pretty quickly. Got to understand why, right? That's always going to be a suspicion. With that, we come to the end of the 160th episode of Thinker's Frequency. All our predictions turning out exactly how we said they would, right? Which is awesome, which is just extraordinary. I am extremely, not proud wouldn't be the word, but yeah, I feel great that we are being able to make such strong predictions in the face of contradicting information, right? In the face of so many contradictions, if we are being able to predict something and place ourselves in a position where we can benefit, it's awesome. It's something that's going to help us in every way, right? With that, 176th episode comes to an end. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. It's 9:10. We got to punch in. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. I should thank Mr. Sumanth Kumar, Mr. Tushar Tiwari, Mr. Abhishek Kumar, who seems to have deleted his comments, otherwise I would have responded to them, right? The B2B clothing business. But anyway, we've started coming out with the shorts of YouTube. We created a new channel called Thinker's Frequency Clips, and all of those shorts are coming out in collaboration with my channel, this Nishant Mittal channel. So this is awesome, right? First time doing this, very weird, very nice. But a lot of reels, I couldn't find enough time to post them, but I posted 3 yesterday, so a lot more reels are gonna come. Reels, I'm saying shorts. These are excerpts from our big videos. Very interesting stuff. Let's see how they yield. All right, take care, guys. Bye bye.